How to invest in gold in 2022. It is important to remember that while the median age of modern currencies is only 42 years old, gold is a 4.7 billion years old element and has been a popular investment vehicle for people wishing to preserve their wealth and increase their purchasing power for thousands of years. This increase in demand for gold is in effect a sign of investors voting with their feet in respect to the current economic policies being implemented around the world. Physical gold bullion coins and bars. Purchasing physical gold, silver or any other precious metal in the form of bullion bars and coins is one of the safest and most conventional methods of investing in gold. Bullion buyers have a tremendous choice of products when it comes to purchasing gold coins. And bullion and reputable online dealers compete fiercely to provide competitive prices to their customers. 1 ounce gold coins have traditionally been a highly popular choice amongst investors, especially American gold eagles, Canadian maple leafs, Australian kangaroos, and South African Kruger rands. It's important to remember that when buying physical gold, you will always be paying a price higher than the prevailing spot price in the open market. This buyer's premium reflects the markup of retail gold versus wholesale gold prices. Make sure you request our free Gold IRA investment kit to learn how to shop for bullion and avoid unnecessary premiums and fees. Investing in gold ETFs, exchange-traded funds, and mutual funds. Since their initial launch, precious metal ETFs have attracted a substantial amount of capital from the gold investment community. ETFs are popular as they feel and trade like conventional stocks. And the tight bid-ask spreads make it popular for speculative investors with shorter time horizons. Since its debut in 2004, GLD remains the most popular gold-backed ETF on the market, and trades an average of $670 million worth of shares every day. While ETFs are convenient from a trading perspective, some elements of the gold community view these vehicles with caution. ETFs represent an unallocated claim on gold as opposed to direct legal ownership. Investing in gold mining stocks. Buying direct equity stakes in exchange-listed gold miners has always been a popular method for investors wishing to gain exposure to gold. Purchasing stock within these companies gives investors the opportunity to benefit from the gold mining operations of these companies and any future reserve upgrades arising through exploration activities. Equity investments have the potential for capital appreciation as well as dividend payments for the investor. Investors with a comprehensive brokerage account can buy gold-related companies just about anywhere in the world. Investors should be aware that this form of investment carries higher risk than simply buying physical gold. Gold futures and options. Another popular choice for investors with a shorter time horizon are purchasing gold futures and options. Essentially a series of derivatives on the underlying price of gold. These contracts are also used by larger institutional investors as a means of hedging their exposure to price movements in the underlying gold price. In the United States, the COMEX is home to the most actively traded gold futures and options contracts, with an estimated 200,000 contracts changing hands every day. This represents over 20 ounces of gold, a truly staggering amount of metal. Investors in futures and options hope to benefit by rising or falling gold prices depending on the type of contract they enter into.